Welcome to The Explainer. Today, we are looking at a genuinely fascinating transformation in the energy sector. We're unpacking the Q2 2026 earnings report from Expand. Now, this isn't just your standard rundown of quarterly numbers. Oh no, this is literally a masterclass in how a company evolves from simply pulling a resource out of the ground to completely owning that molecule's entire journey right to the final customer. We're going to see exactly how you architect a totally dominant position in the natural gas value chain. So, here is our game plan for today. We'll start by sizing up a natural gas giant, then look at how they're maximizing efficiency and returns. After that, we hit the Twin Eagle acquisition, how they're controlling the value chain, and finally, how they're perfectly positioned for future demand. Let's get into it. Okay, let's dive into this right away with a number, 7.5 billion. Specifically, 7.5 billion cubic feet equivalent of natural gas per day. That is the staggering volume of energy Expand is pumping out. I mean, just let that scale sink in for a second. That level of daily production doesn't just make them large, it establishes absolute, undeniable dominance. It officially makes them the largest domestic natural gas producer in North America.
Section 1. A natural gas giant.
So what does a giant like this actually look like on the ground? How do you physically manage and sustain that kind of incredible volume? Well, you're looking at roughly 2.0 million net acres spread across three primary hubs, Northeast Appalachia, Southeast Appalachia, and the Haynesville Shale. Across this massive footprint, Expand holds over 5,000 gross drilling locations. The big takeaway here is longevity. This geographic spread gives them over 20 years, 2 whole decades of high-quality inventory. They aren't just producing heavily for today. They've secured a multi-decade runway of premium assets co-located near massive growth demand centers. And how does all that physical scale translate into financial strength? The Q2 2026 highlights show a company that is essentially a cash-generating machine. We're talking about roughly $1.2 billion in adjusted EBITDA, so basically their core operational cash flow, and about $343 million in free cash flow in just a single quarter. But the absolutely crucial point here is what they actually do with that cash. They boast a peer-leading leverage ratio of just 0.5x, meaning their debt is incredibly well managed. Plus, they've returned massive value right back to shareholders, repurchasing nearly $849 million in shares year to date. Physical scale is directly driving financial fortitude here. Moving on to Section 2, maximizing efficiency and returns. Generating those massive numbers definitely doesn't happen by accident. It takes relentless operational execution. Which brings us to a strategic question every energy investor obsesses over. How do you actually thrive? Not just survive, but really thrive when market prices fluctuate so wildly? Well, the answer lies in optimizing free cash flow. And Expand has totally demystified this complex balancing act. They continually evaluate their targets based on changing market dynamics, and they found their absolute sweet spot. When mid-cycle gas prices hover between $3.50 and $4, centering their activity to maintain production at that 7.5 billion cubic feet equivalent per day perfectly maximizes their free cash flow. They aren't just drilling for the sake of drilling. They surgically align their production and maintenance with current price environments to guarantee maximum cash generation. Let's see how this actually plays out on the ground. Zooming in on Southwest Appalachia as a prime example of this efficiency, look at these hyper-specific metrics. First off, they're drilling much faster, a record 2,724 feet per day, which is a massive 33% increase over last year. Second, while drilling faster, they're actually cutting costs, down 14% to $730 per foot since 2024. And finally, they are optimizing well completions with their latest Generation 3 designs. This drives well-level break-evens below 275 per 1,000 cubic feet. Better returns, lower cost, faster execution. It's the whole shebang. Which brings us to Section 3, the Twin Eagle acquisition. So you're pulling a massive 7.5 billion cubic feet of gas out of the ground incredibly efficiently. Where does it all go? How do you make sure you get the absolute best price for it? Enter a $1.25 billion strategic masterpiece. Expand announced an all-cash acquisition of Twin Eagle. This right here is the climax of their Q2 report, and it completely reshapes the company. They didn't just buy more drilling land. They bought the vital infrastructure to connect their massive supply directly to the market's demand. To understand why this is a real game changer, look at the identity shift. Before this acquisition, Expand was the largest domestic natural gas producer. An upstream giant, sure, but still just a producer. After this acquisition, they are North America's leading integrated natural gas company. They are shifting from being just a producer to a coast-to-coast powerhouse that controls the molecule from the very moment it leaves the rock to the exact moment it reaches the customer. Let's dig into Section 4, Controlling the Value Chain. Now, what's really interesting about this slide is exactly what controlling that value chain looks like. How does this newly combined entity operate? Well, Expand gains an overwhelming volume of new capabilities, marketing 14 billion cubic feet per day of natural gas. That makes them the absolute leading marketer in North America. But it's not just about marketing, it's about physical control. They gain 49 billion cubic feet of geographically diverse storage capacity and 9 billion cubic feet per day of enhanced firm transport. Now, if you aren't deep in the energy weeds, you might be wondering why storage and transport are the holy grail here. Firm transport and storage capacity literally mean guaranteed pipeline space and physical storage tanks. Why does this matter? Because natural gas prices can spike or crash based on regional weather or sudden pipeline bottlenecks. With 49 billion cubic feet of storage and massive guaranteed transport, Expand can store gas when prices are low and ship it instantly to premium markets when prices spike, completely bypassing regional bottlenecks. They don't just react to volatility anymore, they actively monetize it. And the financial impact of this integration is immediate and massive. Take a look at their marketing and commercial free cash flow target. Their existing target was already a really robust $500 million. But by integrating Twin Eagle, they unlock an incremental $250 million in free cash flow, accelerating their new target to an incredible $750 million. That is a massive 50% jump, driven purely by the synergies of owning the complete value chain. Finally, Section 5, Positioned for Future Demand. So we have an ultra-efficient producer controlling the pipelines and the storage. Where is it all going? Well, Expand is perfectly positioned to feed the surging energy needs of tomorrow. With their new coast-to-coast pipeline network, they have unparalleled access to constrained premium markets. They're locked in to supply the booming Gulf Coast LNG corridor, sending liquid natural gas globally. They are explicitly positioned to meet the massive energy-hungry demands of new AI data centers popping up in the Northeast. And they are providing a reliable, flexible fuel source for the nationwide power sector. They aren't just drilling for today's heating needs, they are literally fueling the future economy. Which leaves us with this final thought. As global energy demand continues to surge, driven by everything from everyday power needs to the rapid expansion of artificial intelligence, Expand has totally transformed its strategy. They've proven they can extract the resource efficiently, for sure, but the Twin Eagle acquisition asks a much bigger question. In the modern energy landscape, is owning the molecule from the ground all the way to the grid the ultimate competitive advantage? Based on this Q2 explainer, Expand certainly believes it is. Thanks for joining me on this deep dive, and keep an eye on how this integrated giant shapes the market in the years to come.